I think it's kind of like the first wave, and you look at the first ripple. First ripple is immediately, clearly, China GDP. Factories are still closed through February 9th, so key thing will be, will that be extended or not? And the narrative is it going to be a short and severe downturn versus something that's prolonged and longer? And clearly, the longer it is and the more prolonged it is, the leisure, hotel, transport sector, which is about 16% of GDP in China, will get hit. And then the next narrative part of that is then supply chain and the secondary impacts of supply chain.
And that's the question, right? Because even if it's short and severe, and we certainly hope the duration of this virus is as short as possible, we hope the containment comes as quickly as possible, the fear could linger beyond that, right? And so even if you're talking about short and severe, do you think that could have a substantial knock to growth globally, a substantial knock on to investor sentiment?
It could. I think the markets will look through one-off to a certain point. It depends on the duration. So like with SARS, to the extent it's relevant, because we don't know yet, we had China GDP drop from 12% to 3.5% quarter on quarter, but then recovered to 10% for the full year. So, and of course we had...
pretty quick, yeah.
That's correct. And we, of course, had the de-risking. And what's interesting is we had the de-risking in bond markets and commodity markets earlier, and then now equities are catching up, and they've done their first bout of de-risking. So markets clearly are attentive to the risks now.
What are the markets, the equity markets, and the rebound that we're seeing today after that massive sell-off yesterday, suggesting to you? Because we are given to understand that there has been significant buying to the tune of $1.9 billion in the air shares market to comfort the market at these levels, at lower levels.
Yeah, I think you will see some bottom fishing. Keep in mind, what's the narrative? Again, we had a very strong year across asset classes last year, and that continued in January. So there is cash on the sidelines that's going to start to average into this. That's what we would think. That's prudent. You can't pick the bottom. We don't, like we said earlier, about the duration of this crisis, how bad it can get. But I do think there is a little bit of cash on the sidelines. We had net flows out from equities last year from individual investors. So some people will look as a buying opportunity. Clearly, timing, how you want to do that is anyone's guess at this point, but that will cushion some of the moves. And then secondly, fiscal policy is important. China is now being proactive. We're seeing the last 2 days, you're seeing on the liquidity side.
Once again, stimulus, which is exciting investors in the markets.
It's calming nerves. Again, we're in a broader process. It'll take a few weeks before we know how much this is, actually how bad it is from a mortality rate perspective.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.